show of hands of who here is an actual issuer that's actually looking to raise capital either through an ICO or through crowdfunding or trying to really decide, okay, great. So we have a bunch of issuers in the audience. Okay, that's fantastic. This panel, we're focusing on whether or not you should tokenize, whether you should do, if you're deciding, what's the best mechanism for your financing. Should you explore the ICO path, the crowdfunding path, and we thought that we would really take the time to start off kind of focusing on from the issuer perspective and talk about some of what you need to look out for to make that determination of how to raise capital. There's going to be a lot of advisors that you'll need. There's going to be lawyers you'll need to talk to. The expenses, how to market your IPO, whether you're looking, or your ICO, or whether you're looking to go to a, institutions, whether retail investors. So we're just going to explore all that. And I figured at the end, maybe one of you could actually ask, talk a little bit about your exact offering and maybe question the luminaries on this panel here to find out maybe some advice from some of the experts. So with that, let's go down the road and everyone take a minute and introduce themselves, and then we'll get started. You want to start this end and we'll come down?
Yeah, that sounds good. Kind of a bummer to follow a 8-time Olympic gold medalist, but I think we'll do our best. So I'm Amit Singh. I'm a partner at the Stradling law firm. Stradling is a full-service firm with 130 lawyers and 8 offices. I'm a partner in the corporate group. I've been practicing corporate law and business transactions, securities law for over 20 years. I've represented issuers and or clients in M&A transactions in a few $1 billion worth, over $1 billion in venture capital transactions, and more relevant to our discussion today, issuers in over $150 million of ICO raises.
Brian McMahon, I'm the founder of Expert DOJO. We are an accelerator on the top of the Santa Monica Mall. If anybody's looked out of the window of the Cheesecake Factory and thought, what is that random place across from me? That is us. We set up our location about 3 years ago, specifically to deal with democratizing not just institutional investment, but success rates within early stage startup. So we looked at startups that were failing, which was about 95% in Santa Monica and in the Silicon Beach area. And we thought, how can we improve that and how can we work with it? 3 years later, we're not only more deep in early stage startup, we only deal with pre-seed, seed, and Series A than we've ever been before, but we have 4 or 5 companies who are going through with ICOs. We have a bunch of companies who are doing crowdfunding. I've been deep in with everything from WeFunder to Start Engine and everybody else as well, so I look forward to contributing today.
How's everyone doing today? I can't hear you from up here. How's everyone doing? All right, it's like to hear. Cool, thanks again for coming to the panel. My name is Kevin Winston, and I'm founder of Digital LA. Digital LA is LA's largest startup tech entertainment networking group. We've been doing events in the LA area for the past 9 or 10 years now, all around startups, tech, and entertainment. In 2013, we did our very first Bitcoin panel, because that was the first time everyone was really talking about it, where we had Brock Pierce and Michael Turpin and some of the other folks who are experts in the field that Apollo was just talking about, talking on a panel about Bitcoin back in the good old days, and it was $300. And since then, we've been doing a bunch of other events. Over the past 6 months, we've been doing monthly events focusing on ICO, blockchain, crypto, all that good stuff. We recently had a crypto cannabis panel in April on 4/20, so that was fun too. So happy to be here. We do bunch of events, and also something called Silicon Beach Fest, which also has added a cryptocurrency track. So we have a lot of speakers and experts in the field, both locally and from outside of Los Angeles, who come and share their expertise. And I have asked them this very same question, which we're going to be talking about. So happy to share some knowledge.
Great. And my name is Dara Albright. I'm founder of Dara Albright Media, as well as FinTech Revolution TV. I guess you could say I'm an unrelenting advocate of any type of digital disruption. I come 26 years on from Wall Street, very traditional finance, recovering investment banker. So I've worked with companies in the past in all different stages of development, helping them raise capital all through, through the IPO process. So to me, it's fascinating to really see just how the evolution of raising capital and the transformation that we're seeing, and the democratization is just incredible, and it's really giving all different types of innovators and innovations an opportunity to, to really get the funding needed to really be able to get their inventions out there. Okay, so let's get started. I figured we would first start talking a little bit about what are you guys seeing in terms of issuers coming to you and wanting to know. Is that like the first thing, a couple of years ago, people would start asking, what is this crowdfunding thing that we're seeing? How do I get involved in that? Do you see now more people are actually asking how to use, ICOs or using, crypto, or are you still seeing, crowdfunding as a big, as a big kind of area that people are looking into? So what are you guys seeing?
I can give it certainly from a startup approach. I secretly felt, because it's not going to be a secret after this, but secretly felt that crypto investors in ICOs, not everybody, because there's some nice people in this audience, but a lot of them were some of the dumbest people on the planet about 2-3 years ago, okay? And I understand that might be a little bit controversial, but I felt it because I'm used to a normal startup valuations. So I'm used to, if a company starts off, whether it's venture, whether it's angel, whether it's anything, like Google, for example. Let's use Google as a great example. When they first went into plug and play and they first got their valuation of $3 or $5 million, and they've subsequently become one of the most valuable and best companies in the world. But they went through a process, and the process means that the investors get their returns, and we don't create this crazy economy. Now, I'm not going to talk about EOS, but I am going to talk about, in general, the valuations that were given to crypto companies. And I had companies coming into the dojo 3 years ago who couldn't raise $20 from their mom, who were coming back 2 years later saying, you know what, we're going to raise $50 million based on a valuation of $400 million. So it's a really difficult question to answer, because if there are still some dumb investors out there who will invest in really high valuations for a company that doesn't really have a business model and hasn't really got a community to keep any kind of token going ever in the future of the world, then awesome, you should definitely do an ICO. But I don't feel strongly about this. And I just want to add one thing. I love crypto. Like, the democratization of money is singularly the most beautiful thing that's happened in my lifetime. It's something I never expected to happen, but we've really fucked it up over a period of time by putting valuations too high and putting companies in that should never have raised what they've raised. I think we're at a more sensible place today for where we are. But
yeah, in the fall of last year, when crypto and Bitcoin was going off the charts, ICOs were too, and there was this huge interest. So from November through early this year, we've had a bunch of people come into to my events and other events in the LA area, people trying to basically turn their idea that was kind of a crowdfunding idea, or trying to use some other methods into an ICO by adding or tacking on some sort of like blockchain this or ICO that to make it ICO. But does it actually really? I mean, like, break it down. Look at your company. Are you actually adding additional value by having a token or not? It's something that everyone really needs to think about and look at it, and talk to advisors, talk to other folks. But I just see a lot of people just adding it on just to raise valuation. And in some cases it works, which is scary, as you're saying. But look at your fundamentals and look at how much risk you're willing to take, because it's definitely a much riskier field than doing a crowdfunding.
They're doing that, by the way, even in the public markets. Did you see there was a company that made iced tea that turned its name into, something like blockchain?
ICOT.
I want to smoke weed on the blockchain. I think it's awesome.
There are a fair number of crypto cannabis companies that are trying to do that, including Toke. Where that's the name of their token, is Toke. So.
Yeah, so I get calls at least a few times a week from somebody saying, hey, I want to do an ICO. And we're very careful about who we take on as clients. People who are just out there saying, oh, there's all this opportunity for money and I want to get some of that money, we don't want to mess with those people at all. We only represent people who are really trying to build something, and it does make sense to create a token, and they are creating a real community and building a real business. Unfortunately, we do get calls from a lot of people who aren't looking for that, and they're really just trying to cash out because, as Brian was saying, we're in an unusual environment right now. Normally, you build a business, you have a valuation, and then you do something else to hit some milestone to raise the valuation, and then eventually you get liquidity at the end. You could do an IPO or you sell your company in an M&A transaction. Now what's happening with these ICOs is you're flipping it on capital raising on its head. You're actually getting liquidity. You're doing an IPO basically from day one. You're actually selling your business from day one based on a white paper before you've actually done anything. And so we just are very careful when we vet those people.
I'm curious in the audience, who here is thinking about a crowdfunding campaign or has already done one? Cool. And who here is thinking about an ICO and who's already done one? Oh, wow, two. Okay, awesome. That's usually about what we get. Cool, thanks.
And just also out of curiosity, out of the ones that raised their hand for who has done a crowdfunding campaign, did you do an equity crowdfunding campaign or was it a rewards-based? Just so, show of hands, rewards-based. Okay, show of hands, equity. Okay, interesting.
Equity is great. We have so the three companies, I won't say their names, I don't want it to be promotional, but the three companies we have over in the dojo right now, one is an experience company. Think EDS meets Tomorrowland meets Burning Man on a cruise ship for 5 days with 50 DJs all playing electronic music. And the original advice was to them, not by us, was, oh, you should do an ICO campaign because we can create a token and the token will be on the ship and people can buy t-shirts and then they can maybe get drugs later on doing it. No, it's a dumb idea. Like, it's just a great business. It's a great business that grosses $3 or $4 million based on being able to sell their tickets, and it costs them $2 million to get their cruise ship. So it's perfect. So we put it on WeFunder. I think it'll be the fastest selling campaign ever on WeFunder. We're putting it on a CF campaign because it's going to appeal directly to their real community. And then when we hit the CF total at the end, we'll move it to Reg D. We'll move the money in CF, which are accredited users, to the Reg D, and then open up more money in CF, and then bring in more money on Reg D. And in their case, and in one other company, which is an electric car company, we are going to release tokens. So there's the ability in the future to, at least for people to know about it. But there's no value in the tokens. The tokens are not being charged. They are standard security Reg CF leading to Reg D campaigns in a really good place. And then the final one I'll say is one which is an exchange. Currently a marketplace, they do fiat to Bitcoin. They're going to add on a bunch more currencies. And then afterwards, we're going to do ICOs off the platform as well. So kind of Coinbase on steroids. They've been doing it for 2 years. They're a real business with a real platform. And we're going to do a Series A for 5 million with a valuation of 25 million. And then in September, October this year, we'll do an ICO because it's relevant to do an ICO for them. So my only advice for the companies is really follow a great business model for yourselves, because otherwise it'll just be the advisors who sit around you who make a bunch of money off it.
Well, I think it might be helpful if we're all on the same page of exactly what we're talking about, crowdfunding and equity financing versus issuing a token. So the SEC chairman recently gave an example. He said that if you've got a laundromat and you say, okay, well, I'm going to issue a bunch of tokens and you can use them in the laundromat, well, you're not really issuing a security because you're not, it fails a Howey test. You're not taking an investment of money in a common enterprise and working together to build something and taking risk, that enterprise risk, versus if you use that money, if you took that same money and you said, well, I'm going to build another, I've got one laundromat, I'm going to build another laundromat, and I need to raise money to build that laundromat, so I'm going to issue some tokens that can be used in that laundromat eventually when it's built. Well, you're taking on enterprise risk in that time, in that situation, because they may not be successful in building that new venture, and so that would be considered a security, and you have to fall into all the other categories. Alternatively, obviously, you could just issue stock or a convertible note and raise money. But whenever you're issuing a security, you have to comply with the securities laws. So you have to file an exemption. There's Regulation D, where you do a private offering, 506. You have to have some kind of relationship with everybody, and you're only issuing to accredited investors. You could rely on 506C, which you can issue to all accredited investors, but you could post it on the internet, but then you have to verify they're accredited. You can rely on regulation CF and raise up to $1 million from the crowd, basically, but there are limitations on how much people can invest. And then you can rely on regulation A+, raise up to $50 million in freely tradable securities versus all the other situations. There's under Rule 144, there's a holding period of 1 year, so people can't just trade them, so that really gets in the way of the entire idea of this token economy. So Reg A+ is the one where we have most hope for, and where we're currently working on several, because you are able to raise freely tradable, issue freely tradable securities. However, it's very expensive. You know, you probably have $100,000 in legal fees. You have platform costs. You have to have audited financials, et cetera. So it is relatively expensive. So just because you call something a token doesn't mean that, oh, okay, I don't have to comply with all the securities laws anymore. You still do have to comply unless it's very clear it's not a security. And the SEC so far has said that they've never seen one that's not a security.
So I want to really kind of go really into the weeds, and let's use an example. So of a company, let's say, you know, what would be the first thing an issuer would need to do? They just have an idea. Okay, I'm going to start a company. I invented this thing. It's called the flux capacitor. You know, it makes time travel possible. And I'm deciding I want to know whether or not I should do a crowdfunding campaign, or should I do, you know, can I offer some kind of utility token? I'm going to give people, you know, trips to the future at some point. So you know, I'm coming to you guys with this, you know, with this concept. I've never raised money before. I want to reach the masses with this. It's a, you know, it's a retail product. How do I do that? What do I do? What's my first move?
Well, your first move is to figure out, well, how much money do you need to raise? Because depending on, because first of all, you're going to be issuing a security because you're using that money to build this enterprise. So it is an investment of money in a common enterprise, and whether or not you succeed or fail is based on the efforts of others.
Can I add a first move in there just before the first move? Just make sure you don't have a shitty business. Like, make sure you have a value proposition that actually is a value. We spent 20 minutes outside earlier on talking about a coin that we're going to create, which is based on Monty Python and the life of Brian. And it's the Knights of Ni. So we're going to call it the Ni coin, which is going to be an alternative form of laughter. And then that comedy coin, and anybody who says the words Ni, will actually then get tokens. And anybody who laughs, maybe a giggle or does a ha ha ha, they get fined. Or maybe they get an injunction on them, and then they get sent to Ni Island if they're really bad, which is Puerto Rico. So look, just make sure, there's different examples, right? You gotta start it with business fundamentals. Like, I'm an old-fashioned, agile, traditionalist guy. Make a business that's got value to someone. It doesn't have to make money, but it has to have value to a community. And if it's going to be an ICO, you're creating a country, in effect. You're creating a currency for your own little mini country that has to have value. And you have to validate that and make sense. But for everybody else, you just go down the road of the same value proposition you normally do. Hey, do I have a product fit? Are users going to like it? Have I market validated it? Have I got a business brand that I put towards this? Have I created a human-centric design that my community are going to enjoy? And then within that community, is there something that sustains it as a self-sustaining currency? If there is, you start moving towards the road of ICO, in my book at least. If there isn't, then you just have a great product or a great service that you can then look at crowdfunding to say, can I raise money by going beyond accredited investors to non-accredited investors to see, do they believe as I do that I have a phenomenal product that can actually make sense and can be profitable in the future? And then you do the two only important things which are important to you. Number one, you make sure that you as an entrepreneur are not going into something you don't understand and you're not left with a company which is trash in 3 years' time. And number two, which is actually just as important, you're not sucking your investors into an investment which is never going to make them any money and it's going to stop them from investing into other entrepreneurs in the future. Sorry, that was just a one. It's in front of your one.
For this particular example, For this particular example, everyone is familiar with time travel, I think. So it would definitely be easy to build your community and build your PR and marketing as far as that goes. But to your point, like, do you actually have a product? Like, is there an example of time travel which you've done before? So would be a question I would certainly ask. When it comes to asking the question, basically the title of this panel, should I tokenize? I have three main questions. One is, what is the product? Does it make sense to actually have a token attached to it? Is there a crypto tie-in or not? In most cases, you'll find out that the answer is probably not. You have to actually have a real business, as you were saying. The second question is, what is your appetite for risk? The ICO market has new legislations all the time that are coming out. You'll hire a nice fancy lawyer, and they'll also have to be up to date too. They read the legislations a little bit more carefully than maybe you might have time for because you're building your business. So what is your appetite for risk? And then I guess third, related to that, is be prepared to spend a lot of time with your lawyers. There's new regulations again all the time. Whether you have a security or utility, there's going to be a lot of lawyer and legal fees involved. Talk to our friends here at Stradling, and other law firms would help you with that. But those are the three main questions. What is the product, and does it make sense? What is your appetite for risk, because this market is shifting all the time? And three, are you prepared to spend some time and fees on lawyers to help you out?
And then I also think it goes back to your original answer, which was, figure out how much you want to raise. If you're looking to do crowdfunding, you're limited by how much you can raise in certain instances. So, you need to kind of factor that in as well. Okay, so let's say we have the product now.
But it's funny, sorry, just on that point, like, people are picking this number out of the air.
Right.
It's like, how much do you want to raise? I don't know, dude, like 100 million? You think that's cool? Anybody give me 100 million? Awesome. So I'm doing an ICO, or even better, we're not actually going to do evaluation because, we're just going to let the crowd decide, and you're going to give us like pre-funding beforehand. It should be based on how much we need. I mean, how much did Google need to create Google? Yeah, they only needed $1 million or $2 million at the beginning, and then they needed maybe 10 or 15 million. They didn't need $1.5 friggin' billion to create their platform when they were still in a pre-seed stage. So yeah, we need to work out like how much money do you need, but it should be based on what we're trying to achieve for us as entrepreneurs and also for investors.
Right. I mean, you have to have a use of proceeds, and that it has to make sense. You just can't throw things out there. Here's my use of proceeds. I'm raising $1 million, and $900,000 is going to go to my salary.
Go to Puerto Rico. There was a few of them down there. I'm only joking. I'm joking.
Something else to think about is that when you're issuing tokens, you're booking revenue. So you are going to be taxed on that money unless your business plan works out in such a way that you can offset that with expenses. And so there are certain things like forward contracts you can use to delay that tax for up to a year. But if you're issuing equity or debt in your company, there's an exemption from taxability. And so you're not taxed when you receive that. So that's another thing to think about. And then people think
it's an awesome point. Sorry, just on the tax point, it's huge because you could raise $20 million. Your token could reduce in value. You could own $5 million. Your token's worth $3 million, and you just lost $2 million.
Yeah.
Possibly, right?
Absolutely. That can happen. Actually, anybody who's trading like Bitcoin or using Bitcoin to buy things, you have to worry about those things even, because it's property under the tax code. Okay. And then people think also that, if I go offshore, I form a Swiss entity or some other foreign company, then I can avoid U.S. taxes. That's actually not the case. You could be a controlled foreign corporation if the majority of the people who are running the company or own an interest in the company are U.S. persons. The U.S. is going to tax all that money.
So that's actually a great point. So when you're talking to issuers and you're looking for who's on your advisory team to help you with your offering, you have to lawyer first. I would say then that what you had just mentioned on the tax, you may want to bring an accountant on to just help with the tax aspect of it. And then, who else do they need? Let's talk maybe, marketing. I mean, I think that's really the crucial thing that's needed when companies are out there raising capital. You give the best product in the world, but if you really don't know how to get that into the hands of investors, if you don't know how to market, you really have nothing.
They need pretty people as well. I've noticed that a lot of the ICO campaigns are surrounded by a lot of random pretty people who I'm guessing were not the founders. No, I'm going out there, but I feel it's a trend that's happening with a lot of the ICOs coming out, that a lot of attractive people are suddenly moving into the roadshow, which is awesome, right?
In addition to pretty people, which we have plenty of in Los Angeles, I would also recommend a cohesive marketing campaign. A lot of folks think, oh, I'll just like do the marketing afterwards or hire an agency or firm. You really have to be strategic and start planning that out very early on, because what you're doing is not just marketing a product, you're building a community. So as far as developing that, you need to do the basics. First, have your website should be nice and flashy. Maybe not too flashy. You definitely should have your team bios, have what your product does, and why, if you happen to use an ICO approach, why an ICO. The team bio should include any relevant background. And of course, if it's an ICO, definitely have your white paper. Have an email link to sign up for your newsletter, because you should be doing outbound communications, giving them updates on when things are going to be available, et cetera. So that's step one, having like your website and your social media and your white paper down. Step two is, what is your strategy once you are launching or are about to launch, depending on your time horizon. A lot of people will speak at conferences or do a roadshow where they visit various institutional investors all around the country or the world. There are a lot of various places like Puerto Rico or places in Europe where it's very popular to start developing your base of your folks if you decide to do an ICO. And then another category, which is kind of new and is another area that Airlay is excelling in, kind of to your point, is having influencers. So there are influencers both within the financial, fintech, crypto world, which you can like reach out to at conferences or tweet at or get on board and see if they're interested in your product, or you can go to other influencers who are experts in your space to have them help tweet or promote. And in some cases, some ICOs are actually giving tokens out to people who are doing that, whether they're influencers, and some even to regular people who say, hey, if you write a blog on our post, we'll give you some of our stuff. So that has to all, of course, be listed and described in full detail, but that's some of the marketing strategies for the ICO. For crowdfunding, on the other hand, you also have to have a good website, you have to have your social, you have to have the email newsletter. In addition, if you do crowdfunding, you should also have a good video. What is your pitch video? Which is usually the founder talking to the camera on why they're doing the crowdfunding campaign and what they need the money for. In crowdfunding, you should also have your list of your pledges, where if you pledge this much, $10, you get your name listed on the site, or if you pledge $100, you get this, et cetera. So, and then that's part of your marketing campaign as well. With crowdfunding, just the fact that you're doing the crowdfunding is also a marketing campaign. So when you actually release, everyone who helps support it, even at the lowest tiers, will be excited that you're actually released, and you can remind them to help promote what you're working on then. So those are very briefly a overview of marketing strategy for both your ICO and your crowdfunding.
So this question is for Brian. What would you say is more important for an issuer? Would it be a better white paper, or not to have a face for radio?
So, again, I come from a place where business plans are important, right? So I get the concept of a white paper is really good. I felt that a lot of the white papers I saw in the early days were just extremely technical, because they were written by very technical people who knew how to do that, and they kind of veered away from what are your milestones to actually achieving objectives that need to be achieved to get you where you want to be. I feel that if this had been 2 years ago, I would have said, please stop that and start creating real white papers that respect the investment that you're looking to get in, because these are not just big Silicon Valley people you're bringing in. You're sucking in moms and dads in their houses in different places, and they need to see that there'll be a return on that type of money. Today, I see it's got much better. Honestly, the business plans are really good. The milestone plans are really good. I'm with Kevin. I love crowdfunding. When crowdfunding came out, I thought from a regulation perspective, they nailed it. Better than anything from a government I've ever seen. The CFs, the Reg Ds, the Reg Days, A's, everything. It did not stifle innovation. It didn't stifle people coming forward. It helped create a great community. And I think the ICO will go to that stage. We'll get better at it. But you should just follow exactly what a great crowdfunding program was, which was roadshows. You go to 10 or 12 different places. I'm not sure it's a democratized process, because if it's an ICO, it's going to cost you a couple of $100,000. But it definitely is a process that allows you to do the marketing you would normally do in a year in 3 or 4 months. So everything, again, I'm totally with Kevin on this. You got to have great advisors to make sure you have the right token, the right platform, the right everything. But then everything is marketing. Everything is, how many users am I going to get? How am I going to get my community to love me? How am I going to make sure that not just Facebook ads, because you can't even do that most of the time anymore, but how am I going to build a community by going nuts over a 3-4 month period and seeing everybody who's of influence, not necessarily the small people, but everybody who's at influence, whether it's hedge fund places and everything else.
So wouldn't you consider this the next evolution kind of from crowdfunding, the next iteration? Or would you consider this something completely different, a whole new ballgame?
I think we've taken a step backward to go take a step forward, right? Or take 2 steps forward. So we've come up with this great new idea, which is, hey, blockchain is going to be awesome. We don't really have it applied to many places, if anywhere, but it's going to be really awesome. It's excellent. For me, it's like the next level to an Excel spreadsheet. It's really good, and it will really help, but does it change the world on its own? Not really, but it really helps, and it's a good reason for us to be able to change the money equation. The cryptocurrency aspect of it, most people don't understand. Most people buy it on hype. It's dumped, and it's pumped, and it's pumped, and it's dumped, and we've got all that stuff going on, so we've got a lot of middle markets being changed, and there's a lot of greed and corruption in an area which is absolutely awesome. So I think we've taken a step backwards, definitely 2 years ago, and I think now really strong people, I loved that Apollo just kept saying there, we do need to regulate, not for the government, screw the government, we don't need to regulate it even for the high-level Silicon Valley investors, we need to regulate it for normal people who are just listening to the stuff on the radio, and they're buying, you know, $100 in some company which is worth 100 million that they know nothing about. So it is awesome. I love it, but treat it like a real business. Build a team around you like a real business. Get advisors and board members like a real business, and just assume you've got the hardest job in the world, because you're not going to go through the normal funding process of pre-seed, seed, Series A, Series B. You are going straight from pre-seed to Series C. That's why there's so many investment bankers sitting in the audience today who would never be at a pre-seed conference. They're here because you're going through an impossible journey. So just make sure you bulletproof yourself on the way.
So you also make a great point where you talk about the roadshow. And typically, you know, a roadshow, when you're going out there and raising capital, when you think of a typical roadshow, it's institutions. You know, you're meeting with fund managers. So, you know, but when we talk about this market, we're talking about the democratization, we're talking about reaching individuals and opportunities for the crowd. So, you know, how is, you know, where do you guys see, where is really the market for these offerings for the most part? Do you really see this as a, you know, really the opportunity for the crowd to really be engaged now and get involved and really truly be the market? Or are we still looking for institutional capital? And where do you guys stand on that?
I think we're at the beginning phases, honestly, because with all the roadshows, you start with conferences and you start going to institutional investors wherever they are in the world. I don't think we're quite yet at the point where we have ICO news as popular as being like on the cover of USA Today or commonly talked about on your local radio station. We're not quite there yet. So you start with, right now, the institutional investors and, you know, the large think tanks and agencies that are doing that, because it hasn't quite gotten mainstream yet.
So if that's the case, then an issuer starting out now with this idea, or, you know, this new flux capacitor idea, the first thing I would do is, let's say, contact you know, one of you guys, and I would say, hey, I'm looking to start this. It's the first thing you would tell me is you would help me raise the initial round, I guess, with institutions. Is that?
It's hilarious, because the same VCs that wouldn't step down off their sofa to speak to a normal startup with the same idea just offered us $5 million in about a 15-minute meeting for a early Series A for an ICO that they see they can double their money on. Like, VCs are super smart, and that's why you got to be careful who you partner with as well. They're leading this space. Family offices are coming in a little bit as well. The hedge funds and the institutionals are definitely there too. But everybody's getting in so they can get out quickly. Like, most of these guys, with the exception of a few of the ICOs they're going into, most of them are very quietly moving away once it's at a nice value and they've got their discount and they can move out with their immediate profit. So the institutionals are definitely leading, and interestingly, the same ones who wouldn't have led if it had just been a normal company.
Well, that's a great point also. So what then should issuers look out for when they're approaching institutions, you know.
I mean, sell them based on greed. Look, the same reason that that bird got that idiotic valuation like 3-4 months ago, $400 million here for an 8-month-old business because all of the investors felt FOMO. That's it. That's what drives investors. Like we could pitch to angels all day as we do for follow-on funding for what we for the startups that we bring through, and they're like, "No, we'll wait." But as soon as they see a round being filled, everybody wants to come in. It's the same as the concert when it all sells out in the last 24 hours. Same as this place, right? There was no tickets here after a week ago. So with your investors, it's the same. If they can see the end story, and if they really believe in it, and they believe that their $20 million valuation is going to go to 40 and 60 and 80, and they see a road there, then they'll invest. Like, there's a lot of institutional investment money that's been put aside for early stage investment. It is a roadshow, though. Most of our startups, we expect them to pitch 150 times before that we get a decent lead or second lead investor. Some we've had pitch 400 or 500 times, some it's been a little bit less than that, but you should allow for that, and you should allow for a 2-3 month battlefield where all you're doing is pitching to everyone. If anybody is walking slowly past you with a $5 bill in their pocket, you're pitching to that person, and you're asking for all their friends and where they go, and you don't let them go, and you make sure that you sell them the vision only if you believe it yourself.
Yeah, whether you do crowdfunding or whether you do ICO, it is not something which you do as kind of like your 9-to-5 job during the day. You're doing it 24/7 nonstop. You're calling all of your friends. You're promoting on all of your social networks, everyone you have a network with anywhere to help promote what you're doing. It's just to emphasize that.
Can I add
it is a full-time job 24/7. And you can hire an agency, which you should definitely do, but don't assume that just because you've set up your ICO fund or you've pressed go on your crowdfunder, GoFundMe or Kickstarter, whatever platform you use, that suddenly money will start pouring in, because it's not. You have to actually do the footwork, go out there. It's a lot of hard work, and that's why I said earlier you have to have a very comprehensive strategic marketing campaign to go get those funds.
Can I add one thing I forgot to say? We do it we send an email out every month to all of our investors. So if any of you are here, I apologize for this. And at the end of the email, even though we're always looking for LPs, like we're opening in China and Israel and other places, we always write at the very bottom of the email, "Hey, listen, guys, just to let you know what's happening with us, because we love you and you're our friends and our partners and everything else. We don't need any money whatsoever right now. We're really happy. Everything is totally good in the ranch. But pop by and say hi anytime." I swear to God, I get at least 3 or 4 emails every time I send that out saying, "Are you sure you don't need anything? Like, is there something we can help with?" So don't play the rabbit or the hare all the time. Just understand it's a game. You need to create strong friction, and they need to feel that you're popular and other people are out there looking for you as well, and you can feed that a little bit too.
And what you're doing is you're building a community too with your newsletter. You're letting people know what's going on so that they feel part of the community, so that when it is time to raise, they actually know who you are. You're not just hitting them up for money when you need it.
Absolutely. I send them out one by one. One by one. It takes about 2 hours to do, but it's the best spent 2 hours that I do every time because they feel it's personal.
See, I have a little bit of a different perspective when it comes to the institutional investor. I mean, I think we're all sitting here today. I think we have this conference here today because I think if you really think about it, the institutions help break the small cap IPO markets. And in part, they just got too big, so they weren't even really able to even invest, to make an investment in such a small deal. So, I mean, are we being too optimistic, thinking that institutions are going to come into this space and follow the crowd? I mean, should we really focus on institutions, or should we really be focusing on the retail investor?
Well, so we actually do represent some funds that invest in this space, and a couple of the funds are actually seed funds. So you have your idea, you only have your white paper. They will help fund you through the next stages, pay the marketing people and all that, but they take a massive discount on your offering, sometimes 90%. But a lot of the issuers view that as worthwhile because they're not really they're not taking any risk. So and then these funds, they're putting in only a small amount of money, maybe $300,000-400,000 into the venture to get it started. But then it can help you pivot into a Reg A Plus offering or help set up the marketing for your offering. So there are funds out there, But in order to get that, it's more the typical traditional venture route where you have to have clearly a good team. So they're not just going to invest in this great idea. They also want to invest in the team. And so you have to make sure that your team is properly built out.
We just got the 5-minute mark. I just wanted to make sure that everyone knows that there are a lot of issues that we've been talking about here. Everything from legal to global perspective to what is the product to marketing to building a community and what's the outlook for ICO versus crowdfunding. I actually just tweeted a infographic from @DigitalA on Twitter or @KevinWinston on both, which actually compares both ICO and crowdfunding on a dozen different attributes. So it's kind of a little worksheet to basically help you think about these various, what you should do on these various 12 attributes. So should we actually ask the audience for questions?
That's what I was going to say. If we have like about, I guess, 2 minutes left, if someone wanted to just, if you're doing a raising capital, if you had a question for the panel that focuses, want to do that? Okay.
Okay, we have a question over here. I always do this for my events, so it's fun. It's Oprah time. Amy.
Hi, how are you? Amy Seidman from BFlow, and I am interested in where the security versus the taxability comes in. So if you're purchasing, or seeking investment in your pre-sale and you're using a SAFT agreement that's considered a security, it's a piece of paper, is that taxable? And when does that tax event occur? Is it when you issue the token and do you have to pay taxes on that security pre-sale, or is it only on the ICO?
So
we'll let the lawyer handle that one.
So the SAFT is considered a forward contract if it's structured properly. And so in theory, you should be able to delay the tax for up to a year. Maybe if you play with your fiscal year, you could actually extend it a little bit longer. But so the tax shouldn't, so you are issuing a security, you have to comply with the securities laws, and then upon conversion of the token, or 1 year, whatever comes earlier, you're most likely going to be taxed at that, well, you'll be booking revenue at that time, and then you'll be taxed during that tax year. There are ways to play with that a little bit, but that's a basic answer. But keep in mind that you do have to be careful the way you structure your SAFT, so that if you are thinking that your token that it converts into is not a security, you have to structure it in a way that that makes sense. The SEC doesn't like the SAFT, but you could arguably structure it in a way that if you get to a year or so and it hasn't converted into a token, or even the token issuance occurs, that the investor has a choice of either converting to, let's say, Series A preferred stock or the token, so that the quote-unquote investment decision is made at that time. So you have a better argument that it's not a security, assuming all the other, the protocol's already built, and I could use that token from day one once that token is issued. As long as all those things are met, then you have a better shot at it.
We have a question from Darius with blockchain.
Yes, hi, my name is Darius. We're building one real estate blockchain. I'm doing this for 25 years, and my question is, we're really good in real estate, but I hate going to VCs and ask for money. I hate it. So what would be your recommendations? Because I feel like dancing on a pole, so what would you recommend? Thank you.
If you did that at a VC meeting, you definitely would get some attention. So yeah.
Hey, Kevin, just give us that again. Sorry, he's raising money for real estate?
He's raising money for a real estate blockchain platform, but he hates talking to VCs. So if you hate talking to VCs, crowdfunding is a good way to go.
But you should talk anyway. So, seriously, you know what? It's a disgusting thing to have to do for a 3 or 4 month period, because, and I mean for everybody, even when I put entrepreneurs through it, it's terrible, because like every VC suddenly feels like they're Bono after about 5 seconds. But the truth is they also feel FOMO, and they're also leaders in this community. So if you're a VC and you're actively saying, and they also talk as well, I'll give you just a really quick story. Like one of our companies, Smart CSM, who raised 1.5 there about 2 or 3 weeks back, a guy called Richard Walpart, who's the head of Amplify and Excel, really big VC, and we had been reaching out to him for ages just to put in a small amount of money, and right at the end of the round he walked over and he said, I have a rule, I need 3 people I trust to tell me that I should invest in something. Here's a check for $50,000. So you have to. These guys have to feel that your product is great, and just for a little while we have to eat our ego, and we have to do the pitch competitions, and we have to go to their offices and stalk their houses and hang outside their children's schools and do all that kind of stuff, because they're the ones that will give you the good valuation and go forward as well. And as difficult as they are sometimes in your rounds, if you have a VC in one of your earlier rounds, they make everything much simpler going forward as long as you hit your numbers.
All right, I have a question over here. Last question, because we have the next panel. All right, so the question here is Jason with jalapeno inventive. I just had jalapenos for lunch.
Oh, spicy. It's good. If you're looking at generating some funds and you're thinking about maybe the risk, and I understand that there's a little bit of FOMO involved, but wouldn't it be safer if you only need a smaller amount to go with something with less, regulatory, I guess, stigma around it? Like if you only need like $1 million, wouldn't it just be safer to do some other traditional type of capital raise and then later go to an ICO or kind of evolve into some of these more interesting funding strategies in the future?
It's
yes, just
definitely
do
easier.
crowdfunding. If you don't have to do ICOs, don't do it.
It's definitely a lot less risky to go down the route where you already know what the regulations are. So if you only need $1 million, you can use Reg CF. The costs are relatively minimal, and if that's going to get you to where you need to be, that's probably the route to go. But always keep in mind what the other folks have said is, you have to have something that's interesting to people. Just because you can fit a regulation or find a way, you have to make sure that people are interested in the first place. So do your research, build your team, build your product before going out and trying to raise.
And a tiny point to add on to it, you have two choices forever in business. One, are you a service business where you want to grow the business, you only take the money you need, you bring in as few people as you possibly can from the outside, and you build the business based on profitability and it's yours? Or are you going for a venture-backed business? If you're going for a venture-backed business, they are looking on that first moment they meet you for a 20 times return. Now, they ain't going to get it most of the time, but that's what they want. If they're feeling greedy, they want a 50 times return. So whatever you're asking for should tie into your company having the potential to become a $100 million to $1 billion company. That's where you should be going from. If it takes you $1 million to get there, or $3 million, or $5 million, then that's the money that you need to do before somebody can get past you. And my final point is, if anybody likes the coin that we're creating, which is the N coin, just go to expert_dojo and just say, I support the N coin. That's N-I. You don't have to do the accent.
Basically, if you don't have to give up part of your company, don't. If you can handle it without, do it. And if you can avoid ICOs, basically, and still build your company, do it. So, because there's a lot of additional things you got to think about when you do an ICO.
And I just want to conclude by saying also, if we learn one thing from this conference, we don't even know if ICOs will even, personally, I think they're going to evolve into something else. So it's probably unlikely that we're going to be looking at ICOs. People are talking about really, it's STOs and it's, so the industry is really going to evolve. It's into probably some other kind of financing product anyway. So, great. Well, thank you all so much.
Thank you so much.
Thanks,
Look
folks.
forward to
Thanks,
seeing you
everybody.
at a next event.